Thank you for joining this recording. My name is Ryan Donovan. I'm CUNA's Chief Advocacy Officer, and I wanted to take a couple of minutes to discuss the COVID-19 policy implications and priorities for credit unions. We know that as credit unions face COVID-19 and the impact that it's having on the economy, their top priority is keeping their employees, volunteers, and members safe and healthy, and also remaining in a position to continue to serve their members during and after the crisis. You know, Jim Nussle has said this a lot, credit unions are financial first responders. So anything that the government does during this crisis that helps to support small businesses, consumers, and the economy in general needs to include credit unions as part of that solution. So as we approach government, that's what we're seeking. We want to make sure credit unions can remain in a position to serve, and that solutions that government is implementing include credit unions as part of that solution. Throughout the crisis, we've been in regular contact with government officials at all levels and in all areas of government. We've had regular contact with folks on Capitol Hill, in House and Senate leadership, in the Financial Services Committee and the Banking Committee. Also, the Small Business Committee has played an important role in the development of some of the more recent proposals, and we've contacted and been in contact with them. Of course, we've also had regular contact with NCUA board members and key staff at the agency. We've held staff briefings with the legislative assistants to the members of the House Financial Services Committee, Democrats and Republicans. We've also held a staff briefing for the Republican legislative assistants on the Senate Banking Committee. We've had conversations with members of the National Economic Council staff, with NCUA Chairman Hood, NCUA board member Harper, and CFPB Director Kraninger. And we've sought to address some immediate and long-term issues that are arising at a number of the federal agencies. At NCUA and at CFPB, we've encouraged them to get examiners out of credit unions in the interest of public health and to delay regular exams for 120 days. We've asked them to suspend rulemakings that are adverse or difficult for credit unions to implement at a time when they need to be focused on the safety and health of their members, and to postpone implementation dates of rules that have been finalized, but the compliance date hasn't come to due yet. At NCUA, we've also asked them to provide guidance on board meetings and membership meetings to make sure those can be held virtually or postponed until after the crisis. A lot of credit unions have had questions about branch hours and whether they need to keep their lobbies open. We've encouraged the agency to address those. Also, troubled debt restructuring. Credit unions and other lenders are very interested in making loan modifications and other accommodations to make sure their members and customers can weather these storms. And the regulators, just in the last couple of days, have come out with a joint statement on that. We also encourage NCUA to message the safety and soundness of the credit union system to the public, and to remind the public that deposits in federally insured credit unions are insured with and backed with the full faith and credit of the United States government. At the CFPB, we've encouraged them to finalize the remittance rule to increase the threshold for the number of remittances that can be done without having to comply with the whole rule, and to make exceptions for remittances that are transmitted to Americans and others abroad who are impacted by the crisis. We've also encouraged them to relax the 3-day TRID requirement and also take a look at other disclosures that might need some accommodation given the environment that we're in. We've had a lot of engagement with NCUA, the Fed, Capitol Hill, Treasury, and others regarding the Federal Reserve's Regulation D 6 transfer limit. This is a rule that limits the number of automatic transfers from savings to checking to 6 transfers per month. We've encouraged the Fed to eliminate that requirement. We've been working on this issue for a long time, but it's incredibly pertinent right now when so many are seeking to access their funds. We've been working with Congress and FASB, NCUA, and others to try to get the CECL deadline extended to 2024 or beyond. Doesn't make any sense right now, given the uncertainty that we're in, to impose a new expected credit loss standard on credit unions and other lenders. Just doesn't make any sense right now. So we need to push that off, or even get FASB to withdraw it altogether. We've been working at other agencies to make sure that the rules and guidelines that were established when person-to-person contact was something that we did as a normal course of business can be done in a more remote environment. For example, Congress and the Treasury Department envision sending checks to Americans to help them get through this crisis. And we've raised the concern that perhaps sending paper checks to folks, having them go into credit unions and banks to deposit or cash those checks, might not be the best thing to do in the interest of public health. Are there other ways to get those benefits to Americans? We've also been dealing with the Department of Homeland Security, the Treasury Department, NCUA, and others because credit unions are on the national critical function set, which means they're essential services that need to be kept open during national emergencies. So making sure that that is a uniform expectation across the various jurisdictions. And in many states, the laws still have wet signature requirements, and they may not accommodate remote notary. So is there a way for us to have a national standard on that during this crisis so that documents can continue to be signed and processed? Congress, of course, is playing a major role in trying to provide some economic stimulus during this crisis. They've already enacted 2 pieces of legislation that provide a very significant amount of stimulus. And they're working on a 3rd bill right now. We have a number of proposals that we've put forward that would help credit unions remain able to serve their members. We've asked for appropriations for the CDFIF and the Community Development Revolving Loan Fund at NCUA. We've asked for significant increases in appropriations there. There's talk about expanding the SBA 7A loan program in order to get more money to small businesses very quickly, and we're supportive of that. We've also put forward legislation that would provide for a temporary expansion for the Central Liquidity Facility. There's talks on Capitol Hill about reviving the Temporary Asset Guarantee Program, the TAG program that was a part of the post-financial crisis recovery. We've asked for some PCA flexibility for accommodations for troubled debt restructuring, a delay of CECL, as I mentioned. There's talk in Congress right now about developing a new small business lending program at the Department of Treasury, and also providing guarantees for agricultural loans, and expanding the Federal Home Loan Bank as a liquidity option for credit unions and community banks. In addition to the proposals that are being actively discussed right now, we've proposed exempting member business loans made during national disasters from the member business lending cap, providing credit unions the opportunity to take supplemental forms of capital, possibly tinkering with the low-income credit union definition in order to provide more credit unions powers necessary during this crisis, and exploring ways for credit unions to do more to serve non-members. Of course, we're also playing defense on a couple of proposals. The National Restaurant Association and a long list of proposals included possibly limits on credit interchange, which we strongly oppose. There's been some concern that there will be legislation added to one of these stimulus bills that would prohibit adverse credit reporting. Of course, credit unions rely on credit reports to be accurate. There are things that can be done during this time to note on those reports that the adverse information was a result of the pandemic. but we don't think that there should be a blanket prohibition to adverse reporting. There's been a lot of talk about mandatory mortgage deferrals, and there are some very legitimate constitutional questions that come up in those conversations. There's certainly things that FHFA could do in association with mortgages that are owned by Fannie Mae and Freddie Mac, but we're not sure how a broad nationwide mortgage deferral requirement would work. We're also working to correct some technical errors in the Phase 2 stimulus related to federal credit unions and the ability to receive tax credits for some of the paid leave requirements in that bill. They prohibited federal instrumentalities from taking those tax credits with the intention of really limiting it to, keeping it from the parts of the federal government getting tax credits and GSEs and others. From our talks with Treasury, the House Ways and Means Committee, and the Senate Finance Committee, it doesn't appear that they intended to exclude federal credit unions, so we're hopeful to be able to get that correction enacted in a future piece of legislation. This chart is kind of busy, but it details the timeline of our engagement in this crisis so far from March 6th, when the first stimulus was enacted. You can see our engagement with Congress, with the administration, our membership survey that we launched on March 13th that every credit union should fill out, our letter to the president on the 16th that really outlines our key asks. We've had calls with Craninger, Hood, Harper, the National Economic Council, our briefings with both the House and the Senate staff. We've sent email blasts to Capitol Hill, and just over this past weekend, really engaging with the Senate to provide language that ensures that credit unions are covered in the various programs that are contemplated as part of the third stimulus legislation. So just quickly, the state of play right now, as I mentioned, Congress has already enacted two rounds of stimulus, and there's negotiations ongoing for the third round. This Phase 3 stimulus could address an SBA 7A expansion, perhaps an expansion of the central liquidity facilities capabilities. There's a possibility that there could be some PCA flexibility included. The temporary asset guarantee, the TAG program that would provide unlimited deposit insurance and non-interest bearing accounts above $250,000. We expect that to be included. We expect there to be language on troubled debt restructuring and a CECL delay for entities that are presently required to comply with the new CECL standard. Of course, the wild card in all this is that as of this recording on Monday, March 23rd in the morning, the House of Representatives and really the Senate Democrats haven't been involved in the negotiation of this legislation to a great extent. They're starting to become more involved, so we don't know what additional provisions they may be able to secure as part of this legislation. But as you can see from this chart, we're engaged in a number of issues, nearly 40 different issues in different parts of government. The CUNA League Advocacy team is actively working on to make sure that credit unions can keep their members, employees, and volunteers safe and healthy, and that they can remain in a position to serve their members during and after this crisis. If you have any questions about these issues, I would encourage you to reach out to me via email. You can also connect with me on Twitter or LinkedIn and connect with CUNA. Also, keep an eye out for additional information in CUNA News, the advocacy update that goes out on Monday, and of course the Nussel report that comes out on Friday. Thank you very much for taking a couple of minutes to listen to me walk through this, and thank you very much for your membership in Credit Union National Association.